Uh, Howdy, traders. I haven't done a video for a couple months, so I thought I'd do one today. I'm seeing a lot of risk in this market coming into the next couple weeks. Basically, what we've seen in the S&P 500 on this low volume, late August or early September, volumes could drop off a little bit. We had a breakout of the recent highs, and we rolled back over, and all the inventory for 2 weeks now has been completely demolished. Um, and we already hit, and we know that it was a resistance area right here last time. So I'm really thinking we are going to break back down here on the primary uptrend on the S&P 500. Quite likely coming down to this other secondary um, fib fan zone. Um, so quite a bit of risk here to the downside over the next couple of weeks, in my opinion. One other thing I want to point out, as of Thursday, we had a SAR cross, so that gave us a bearish signal for the trend has possibly changed for the S&P 500. So just keep that one in mind that we've had 2 days with a bearish signal. Okay. Now the diamonds, this has been holding out very well on the diamonds, but I'm see all kinds of risk with Apple and Boeing. And those are two of the main components that are supporting the diamond, the Dow. So just keep that in mind. We do have a SAR touch as of Friday. That typically means the very next day, come to Monday, we are going to get a sell signal on our diamonds. We have a similar scenario with our Russell. We had a breakout, and over the past few couple weeks on the lower volume markets, and all that inventory has been wiped out, and we are back testing going into the first of the week. Our MACD is crossing. Very very iffy situation for the Russell. The primary uptrend is in, but I do at the very least see a back test of the trend line here. So just keep that in mind. A lot of risk. And this one is a little bit more bearish because we do have 3 days of the SAR already showing a bearish read. So this one's leading to the downside. And similarly, on the Qs, when the Russell started rolling over, similar situation, the Qs started rolling over. And this tariff situation is really going to impact the semiconductors. So just keep that in mind that from here on out, actually the Qs will probably drop faster than even the Russell. So just keep that in mind that if we do continue to see some weakness, a lot of risk in the Nasdaq. Okay, and unlike a lot of the other indices, the Nasdaq actually ran ahead of the other indices. So the 174.85 is actually the back test for the Russell or for the Nasdaq. So just keep that in mind. You can see before there's been a lot of weak hands up here in this higher distribution. So this could very easily fall out of favor real quick here. Now, what I do want to point out here, the Nadex, which is the Nasdaq 100, and it's heavily weighted with the large tech, like the FANG, and we did break the primary. We broke a trend line as of Friday, and we came back up and back up. It's not a guarantee that we're going to break down, but we broke the middle 50% fib fan, so we're actually leaning more bearish now on the NDX, and we broke the primary uptrend line. Now I want to talk a little bit about the individual stocks here. And Boeing has a lot of value at this price range here. But I do want to point out, as of Friday, we did come down, back test our primary uptrend line, and we bounced off that Friday. So just keep this in mind. We've had 4 days of a bearish read on this. I think this is very susceptible to a trend line or a primary trend line break first of the week. So that's why I'm really thinking we're going to see a lot of weakness in the Nasdaq and the NDX start of the week here, and also on our diamonds because Boeing is such a heavy weighting in the Dow Jones. So just keep this in mind that lots and lots of risk. Apple, same situation. We came down and we are testing the accelerated uptrend line as of Friday. Lots of risk. It looks to me typically when we come down to this line here, we break right through it and we might base a little bit below it, but we never come down and not break it for a few days. That's why I do think even Apple's going to be lower as of Monday. Um, it all depends on what China comes out and says about the whole tariff thing, because basically Trump came out and said he's going to add more tariffs and it's going to put tariffs on virtually everything coming out of China to the U.S. So I just want you to keep that in mind, okay? Also, I want to point out we saw a little bit of weakness in Apple, but the Apple suppliers, which the component makers, the chip makers, and the makers of the iPhone and stuff, they really got wall up there Friday. Okay, I'll show you one of them here. Texas Instrument, it broke away from the primary uptrend as of Friday. Lots and lots of risk in Texas Instrument to the downside. I don't see any significant support all the way down to the 92 area now, 93 area. So yeah, we got some price reaction, but I mean, as far as long-term support, it's got a long ways it could fall. Micron, another chip maker, completely fallen out of favor here. I mean, this is one here. It's only priced like 10 times uh, earnings, so it's a really cheap relative stock on valuation, but it's completely blew right through the swing low Thursday. So a lot of weakness here. It should have had a strong responsive bounce as of Friday, but it didn't do that, suggesting to me we are actually coming way down here to the $40 range on Micron before we finally find a responsive buy point possibly. Amazon, we do have a SAR 2-day signal on that one. It has room to fall. Still a very solid stock. Nothing to get overly concerned about yet, but we're coming off of a swing high point. So it's logic that we're going to start seeing some profit taking, at least for the short term. Facebook is just a crap stock right now. I think the whole social media sector, if they have an excuse to sell it off, they're going to. Um, so I do think we're going to come all the way down to these prior swing lows. So that's going to put us back down to the 151 area. So quite a bit of downside risk here. And we do have some fib fan support down in this range too. So I would not be going swing long Facebook. Twitter's another one, significant risk. Thursday, it broke the primary uptrend. I see a considerable long-term um, uh, downside potential here. I'm thinking the 2670 area, 27 area maybe might be a potential buy point, $27 area. But yeah, it's probably going to fall all the way down to $27 this week. I'm going to end my video with Tesla to give you an idea of what I'm looking at right here. Basically, with all the recent news and everything, we've come down to this area before, and then we bounced, but we didn't get much legs. You notice here the bounce was a lower bounce than before, and we're coming down to that again. I do not think this area is going to hold. I think we're going to be coming back down into this prior range, and the actual near term 185.40 area, that's where I'm thinking that Tesla's going. So you can do intraday scalps with Tesla, but I would not be overly excited to the long side. And I'm seeing all kinds of bullish posts on Tesla over the weekend here. And don't get me wrong, we can get a short-term bounce with Tesla because it moves like a beast. I'm just saying that this is a bearish chart, and the bear market, bear rules apply. I mean, uh, you do not swing a bearish chart. You don't swing it overnight. I mean, that's just one of the rules you have to stick by. It's cardinal rules. Okay, so basically, pops are shortable. That's the rule you need to stick with. So that's just some of the stuff I'm looking at right here. Overall, the markets are doing real well, but we are going into election season. I don't see the Chinese or the Canadians working out any type of deal, unless Trump really uh, buckles on his tariffs just to close the deal, and which he might, for political reasons. But I do not see any type of resolution, and as this draws on and no resolution into the election, it's going to cause a lot more volatility and turmoil in the markets. So just remember that's just my opinion on it all, and we've probably seen the highs until after the election. Okay, that's all I got to say. Thanks.